Hello all, welcome back to my YouTube channel. Today we are going to talk about cup and handle pattern, how to identify on which chart it gets formed, and how to trade those with the execution and with the perfection. So let's get diving. Now as you can see in this chart, we have the chart of VST Tyler. This is one of the tractor making company, and we are looking at its daily chart right now. And in the daily chart now, as you can see, we are actually forming the W pattern. Okay, now I know most of them will say we can actually trade this by by seeing this candle as a breakout and with having the lows of it. But now seeing that, we also have double confirmation coming up. That is, there is a cup forming up and there is a handle. So if I like to show you, then it will be in such a way that this will be a cup entirely, okay, and this will be a handle, and we are awaiting for the breakout for sure. Okay. Now having this said that we have the W pattern already. There are few of the people who would like to enter the trade here, no doubt at all, and it is nothing wrong in that. Okay, now since we have a cup and handle being forming, that means we have a double confirmation that the breakout is awaited beyond 3451 resistance area, and once that has been breached, and if we sustain about those levels, then as you can see, this level is so important that this has proven as a support. Okay, this has proven as a resistance many of the time, and even the last few sessions we have been stuck there, and we saw a sell off from there. Okay, so once we get I would say once we get sustain about this level, I'm telling you, we are at least going to touch, at least we are going to touch 4200. Okay, and I personally feel this beyond the target of 4200 as well, if you are planning to hold it for more than a year. Okay, so just identify there will be a big cup and this and I would say a handle kind of a pattern with a very small range of expansion, and then we are awaiting a breakout. For cup and handle, trade has been suggested only after breakout. Okay, so like for example, if we have a new trade, if a new candle being formed, like if I draw another candle, an imaginary candle, like for example, if we form like this, okay, or if we see that if there is kind of a the retest after a breakout like this, and then again there will be another continuous rally. So once we get such kind of a setup, then we can enter a trade. Of course, we can enter a trade somewhere around here. Okay, having the low of that candle as a stop loss. Even right now, if someone wants to enter, they can of course enter it with the stop loss of 3200, no doubt in that. Okay, but I would like to advise to people who have entered right now, just enter it with the half of the amount. Okay, so that if you even enter with the 50% of whatever capital you have invested, you still get a room to enter after breakout of 50% of the remaining capital. Okay, in this way you basically manage your risk very well. Okay, you manage your risk, you manage the risk to reward ratio as well. So I can clearly see from the chart, the risk to reward will be somewhere around 1:2. So let me show you that as well. So if we go long from the current market price as well, okay, having been set the stop loss of 3200 and for the target of, let's see, 4200. Okay, and if you can see here very clearly, we are getting the return of somewhere like 24% or 25%, let's see, and for the risk of around 5% with us. Okay, so it's a good risk to reward ratio. This is somewhere like we are matching around 5:1 ratio here. Okay, so just make sure whenever you take a trade, it should never be 1:1. Like for example, if you have a profit of 50 rupees, you should not be having the reward. I mean the risk of 50 rupees as well. That doesn't make a deal, simply because this is a thumb rule of a trade, and it doesn't make logic that if you want to earn 50, then you have to take the risk of the entire 50. Not at all. Okay, the most important thing is to have a risk to ratio minimum of 1:2. That means if the risk is of 10 rupees, and then the reward has to be of 20 rupees. As simple as that. So keep that in mind. Whenever you trade, you have to match the risk to reward as well. And here we are getting a wonderful risk to reward. We are getting 5:1 So like for every 1 rupee of the risk, we are getting the reward of 5 rupees. And if we get a breakout here, which is more likely to happen, if we get a breakout, then we can completely write the profit of somewhere around 25%, and this can happen maybe maybe I would say 4 to 5 months at in the time frame. Now, since it is the tractor making company and we have a good monsoon prediction, I'm expecting a bullish momentum in the stock. Okay, again, just risk at your level, know your risk appetite, and invest the money as per your capacity. Thanks all.